Welcome to Markets Now. I'm Michelle Rook with Darren Frye with Water Street Advisory, and mixed closes in both grain and livestock futures trade. We also had the big Fed announcement out today. And Darren, let's start off talking about that 50 basis point cut. That was expected. What does the market expect now going forward?
Well, I think the market still would like to see more. They've had so many rate hikes over the past 2.5 years. And of course, they've been pretty tight for a long time. We need to see that loosen up. And of course, we saw that first step today. But I think the stock market, as well as our commodity markets, would like to see more as we approach the end of the year.
How friendly is this for the ag sector, especially when we look at things like the lower dollar?
It's a big deal. I mean, the lower dollar just means we're more competitive. It puts our interest in getting our exports at the top of the list, just as we weaken our currency against other currencies. It gives us a tailwind, and so I think it is a big deal. It's a risk, on type of trade. When you see the dollar go down, commodities go up, and so I think it is very beneficial to us.
So let's talk about the fact that, when the funds were going record short in the grain markets, there was a lot of discussion that they were doing that because of our monetary policy. Do you see that script being flipped now so that they will come out of all of their shorts and maybe go long or not?
I don't know if they'll go long, but you're exactly right. They had a recessionary trade on, so they were long the dollar. They were basically short all the commodities. They were pressuring them. They had record short positions on. And really, they were trying to rely on the farmer coming out of old crop, new crop supplies to get out of those shorts. And what we've seen is the bottom probably has come a little bit early. Like, I think there could be a bottom in place already. As we accelerate harvest, we're going to see harvest pressure. But right now, we're ahead of pace. I think we could really accelerate to the end of September with this weather forecast. And if we don't see the market get pressured, we probably have a bottom in place and we're going to continue to move higher. So a lot of that is just the funds were maybe a little bit too bearish at the bottom. We've seen a change in the Fed policy. Maybe they weren't expecting that, but we also see the index fund that is carrying a much smaller long position than average, than normal, and they've been buying. And so whatever farmer's selling we've seen in the market, it's been eaten up by either index funds buying or the traditional funds short covering.
If we do have an early seasonal low put in, the soybean market is one that feels like we've done it. We've been very resilient there. Has that been a function of both supply and demand, in your opinion?
Well, especially on the bean side, I think it is. We've seen China buy in, and obviously we're getting further into the crop. We were 9% harvested this past Sunday in corn, 6% in soybeans. Like I said, I think that'll really accelerate with the weather that we have ahead. And what we're hearing on some of the bean yields is farmers that have really advanced their percent harvested on their own farm, as they've gotten into these later planted beans, they finished under less than ideal conditions. It was pretty dry in a lot of places across the Midwest. And so I'm hearing the yields are a little bit more suspect here, less than what they expected on the bean side. I'm hearing great yields so far in corn, but I think on the bean side, what's taken place is the demand from China, the lack of selling out of South America, and the fact that our crop might be trimmed a little bit in subsequent reports.
So a combination of factors, but technically, while this market, like I said, seems resilient, we still can't close above some of these key resistance areas and moving averages. Do you think we will here eventually?
I do. I think what we're fighting the harvest pressure. I mean, farmers are starting to get into things, but I do think corn can continue to grind higher. So can soybeans. I think a lot of it depends on the overall economy. Do we go risk off on anything, or do we hold this thing together at least through the election here in a couple months? And if we do that, I think corn and beans can grind higher. I'm kind of looking up to that 435, 440 area in corn, and I'm looking up to the first initial target, 1040, 1045 in soybeans. If we reach there, we'll have to evaluate if we can go higher or not. But that was my initial target here as we enter fall.
Yeah. Do you think corn and soybeans have traded their biggest yield?
I think they have. I mean, especially soybeans. I mean, we built in this 53, 54, maybe 55. We just didn't have the finishing weather for soybeans. Corn yields are more respectable. I mean, they are really good. And I don't know if we're going to hold that in there as far as the whole entire harvest goes. But right now, corn yields certainly are better than the bean yields are coming in my opinion.
So do you think that the seasonal low is in that corn market as well, or will we go back and retest it with a fast harvest and harvest pressure coming at us?
I think a lot of that will depend on what the weather in South America does. Right now, we've been really warm and dry in the central northern part of Brazil where that safrinha crop has to be planted after the beans are harvested. Right now, it looks like they're not going to start early. Maybe they're not going to start super late. But if we continue to see that weather pattern be stagnated down there and we push through the middle of October and they haven't gotten a lot done, that pushes our safrinha crop back. And all of a sudden, we got a situation where the soybeans pick up more of an export window for us. The safrinha crop is pushed back, and maybe we have got not just a harvest low, but a low that holds. Even if we go back and retest it, we don't make a new low. And so I think it's going to come down to what South America is doing as we move through the next 2 or 3 weeks here in our weather forecast.
Very good. Like I said, corn kind of moving sideways today. The wheat market taking just a little bit of a pullback after some early strength. I think that's 3 days in a row. Is this just some routine profit taking, do you think?
Yeah, I think the market had run a long way, and we were up against that psychological number of $6 on the Chicago December contract, and we're pulling back. I look for a pullback into that 550, 565 area here in 3 waves down, and then let's see if we can't muster another rally. I think a lot of it will have to do with whether the Black Sea gets rain or not. Right now, Ukraine, southern Russia, really dry as they're trying to seed this winter crop. There's winter wheat crop. And we know that Black Sea, especially Russia's market, has not really bottomed yet. It's not showing those signs. And typically in August and September, it does. And then it starts to move higher. So I think that once that happens, maybe wheat will have a runway ahead to move higher.
Yeah, except that we do have some rain chances in the southern plains that may kind of put a lid on this market, just a little bit of a lid temporarily.
Yeah, and maybe that's what helped the break that we've seen over the last few days. I mean, we capped the rally out. You don't always know what makes that happen, but maybe the forecast for better moisture into the plains was one of those factors.
Yeah. So cattle market, any kind of mixed here today, although live cattle futures yesterday had a little bit of a chart breakout. The fact that we kind of consolidated today, do you think we were just waiting for the Fed announcement, or are we waiting for cash? What's going on in that market?
Yeah, not so sure why we paused today. Maybe it was those things that you mentioned, but I do like the upside of the market. We know we have tight numbers. I know weights have been heavy, but we haven't seen the consumer really back off. And I think the cattle are going to follow more our economic trends. If we continue to move higher in the stock market, move higher with some of these reports that come out on the economy, I think cattle and feeder cattle are going to continue to follow the seasonal higher. If we have a total risk off and a problem in our economy, we see unemployment skyrocket, well, then all bets are off. But right now, I like both the meats, both the pork side and the beef side for higher. But that pork side's got to be watched because we got a report coming out on the 26th of September, and it's probably going to be less than friendly. And of course, hogs have had a big rally. So I'd be looking for an opportunity to sell them, but they have surprised me how strong they've been and resilient to the upside, and they still are doing that for now.
Yeah, you're not alone. Why the funds piled into that hog market so big? Because the chart looks really good.
The chart does look good, and it's kind of a money flow thing. And you've seen some of the CTAs and some of the short-term traders flip as well, and they've just pushed it higher than I thought. But that's good. It's an opportunity to hedge at better prices, and I do think that's something we got to take advantage of because I'm looking for a pretty decent break as we move into the fourth quarter in hogs.
Yeah, that's pretty normal. All right. Thanks so much, Darren Frye
Thank
with
you.
Water Street Advisory. That is Markets Now.